Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. Thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 7:56 on Tuesday the 4th of November 2025. That means that we have completed 3 years and 31 weeks of this roughly 8-year FIRE journey, or FIRE experiment if you prefer. The market has not yet opened. It's not quite 8 o'clock yet, but I normally like to just jump on a little ahead of market open just to see where it closed the previous day, or at least the previous trading day. So as you can see here, yesterday there was very little change. The market closed down 0.01% at 98.72.5. The other statistics worthy of note there, the portfolio value currently sitting at 30,500. That's a return on investment of just under 36%. There are almost 309 shares in the portfolio, and the current average purchase price is sitting at 72.64. So that is where things are at. Obviously, if you look at the shape of the graph there, you can see there's been a significant recovery following Donald Trump's tariffs announcements. So things have just shot straight back up again and continued on an upward trend. I'm not sure if you would even really see the tariffs announcement if you were to run a trend line up that. It's tricky, but if you were to say that the trend was somewhere in around that, it's basically trying to get as much below the line as above the line, if you like. It's tricky. Right, let's get rid of that. So, as I say, market just not quite open yet. It will be open in a couple of minutes, and just before that, let me draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up. How'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, as mentioned on screen there are affiliate links in the description. If you do decide to avail of those, why not drop me a little message, let me know how it went, and that way I'll know to watch out for something on my side as well. Okay, let's have a little look at the notifications. I think the market has just jumped into action there. But it always takes a little minute to settle, so there's no harm in leaving it to do that. Palantir trading lower. Palantir retreats 5% despite stellar quarter as sky-high valuation sparks profit taking. Biggest stocks before earnings: Palantir, Shopify, Uber Technologies, Pfizer and Spotify. Amazon leaps 5% on news of a $38 billion strategic partnership between Amazon Web Services and OpenAI. Nvidia climbs 2.2% as the US approves advanced AI chip exports to the United Arab Emirates under Microsoft license. Mercedes-Benz climbs 2.7% as China signals exemptions to its Nexperia chip export ban. And then we have some news about market holidays. So that relates to Armistice Day, or at least the first one does. So in Canada, the 11th of November, Remembrance Day, there will be no trading. In the United States, Thanksgiving on the 27th of November, and then the 28th of November, it looks as if on the 27th, I'm assuming that's Thursday, because as far as I know, Thanksgiving's usually the Thursday. The market will close early, so that's at 6 p.m. In the UK. I'm pretty sure that the 28th must be Black Friday. Although it's not specified there, but I'd say that's probably what that is. I suspect that the market will not be open that day. Just simply with it being close to the weekend, but we will see. Either way, it'll not make any difference to this experiment. Normally I tend to trade towards the start of the week, more so than the end. It does depend on work and other commitments as well, but generally speaking, that's how it goes. So if we just have a quick look again at the current situation, the market has opened. It has opened in a downward direction, down 0.6%, 4/5, I think. No, 3/5 of a percent already today. And let's go ahead and do this week's investment. So we hit the buy button. If you're a regular viewer, you will know that each week I buy 120 theoretical pounds, and we're buying the Vanguard S&P 500 exchange traded fund. Seen here on the Trading 212 practice platform, and the particular fund that I'm buying is one that's traded on the London Stock Exchange. So to a certain extent that is unaffected by holidays in the Americas, but it is affected obviously by UK bank holidays, or non-trading days perhaps I should say. So at the current market value, £120 is going to buy us roughly 1.2 shares. I generally try to trade on the open market, which is the case currently. So it's a market buy. I'm not setting any stops or limits or anything like that. There is no commission, and when we send this through, it executes pretty quickly. We were able to buy 1.22 shares for 98.10 per share. I think the figures have updated. Yes, they have, because I can remember that there were fewer than 310 shares, and now that is the case, that we've got 310. So with the new figures, then the new portfolio value, albeit I think less than what we started with, just simply due to the market opening in a downward direction. But anyway, irrespective, the new portfolio value, 30,400. The new return on investment, 34.8%. And now we have 310 shares in the portfolio, with an average purchase price slightly higher at 72.74. So there you go. That's perhaps a point of interest for people, just to realise that even though we have just put £120 into the market, because of the change in price and a change in price against us, if you like, we actually have less money now than when we did just before the market opened. Sorry, less, not less money, less value in the portfolio. It essentially equates to the same thing. But yeah, the portfolio value has actually fallen from the time of starting the video to now, despite the investment made, and that is just typical market activity. That's just normal, and I suppose that's something that you can quite easily expect to see when you start to have larger sums invested. A smallish percentage change can have quite an impact on the overall situation. I suppose, I mean, if you think about it, 1% of 300 is only 3. 1% of 30,000 is 300. So just to put that in perspective, that's kind of how it goes. And therefore you will see bigger fluctuations in portfolio value the more you have invested. Right, with that said, guys, that is pretty much it for today. I stream live every week as far as possible when the market is open, and if not possible when it's open, then when it is closed. But the vast majority of the time, I would say more than 99% of the time, I've been streaming in a open market. So I'll be back again next week for more. If you are interested in following the journey, why not subscribe to the channel? And if you particularly liked this episode, why not give it a thumbs up? I would just say, I think that really everything that explains the methodology is at the start of the videos, and that's well worth a watch if you missed it. Until next week, bye for now.